In this video, we're going to look at how we post the cash book, specifically cash book receipts where our cash book does not include balances of cash or bank at the start and end of the period. So up on screen, we've got a typical cash book. We've got both the receipts and payment side, but of course, in this video, we're just going to be focusing on the receipt side. We're also told that we have a balance on our bank current account at the start of the month of £920 and held £562 in cash on the same date. And that'll have relevance when we transfer the figures into our T accounts in the general ledger. So let's bring up a blank postings list that we can now start filling in. Now, when we've got a cash book, we will be posting the totals from each column. We'll start off with the bank and cash columns. Now, both of these record increases in the amount of holdings of money that we have in our bank account and in our safe or strongbox or till, and both represent increases in assets, and increases in assets are always recorded as debits. So we're going to debit our bank account with £4,780 and we will debit our cash account with £456. Then we can move on to the other columns on the cash book receipts, which tell us where all of the money that's gone into the bank or has been received as cash, where that money has come from. The first column is the VAT column, and the total of £101 is going to be credited to our VAT account. Now, it's going to be credited to the VAT account because it represents an increase in the value of the liability that we now owe to HM Revenue and Customs in respect of our VAT. We'll now move on to the next column, and this is the cash sales column, and we will credit our sales account with the total of that column. So £505 is credited to the sales account. Now, it's a credit because it represents an increase in the value of the business's sales, which is a form of income. Then we've got our sales ledger column. Now, just to remind you, the sales ledger column it can also be headed up trade receivables or trade debtors. And this represents a reduction in the amount of money that the customers owe to the business. It's reduced because the customers actually paid the amount that they owe. So that 4,626, that is going to be credited to our sales ledger control account. It's a credit because it represents a fall in the value of the asset, being the amount of money that customers owe to the business. And then finally, we have our other column. Now here, what often happens is that we might have a variety of different different types of income recorded in this other column. So we'll go through each line separately, and we can post each line separately to individual accounts. So if we look down that other column, the only entry is one for bank interest. So here, rather than sending that £4 to another account in our general ledger, I'm going to post it straight to a bank interest account, because that's a better description of it. It's going to be £4 credit because it represents income of the business. We can now move to look at how we record these in the actual T accounts in the general ledger. So let's bring up the different accounts. So we've got a bank account, cash account, a VAT account, which also already contains a lot of entries from the other books of prime entry that we've dealt with so far. We've got the sales account that records the net sales from our sales day book. We've got a sales ledger control account, which already contains some postings from the sales day book, the sales returns day book, and the discounts allowed day book. And we've got a bank interest received account. So first of all, we'll record those opening bank balances and cash balances. So I've recorded those on the debit side because both represent an asset. So at the start of March, we've got balances brought down of £920 in the bank account and £562 in the cash account. We can now start posting the entries from our postings lists. So the 4780 will be debited to the bank account, and the 456 will be debited to the cash account. Please note, in terms of description, I put down cash book, and the reason for this is because in this instance, because of the way that the cash book is constructed and laid out, it's almost impossible for us to determine exactly what the corresponding credits will be to those debits. So instead, we'll just say where that posting has come from in the books of prime entry, and that way anybody looking at the general ledger will still be able to work out where the information has come from and go back to that if there is a query. We'll then post all of the credits. And again, I will use the description cash book for the same reason. So if, for instance, when we look at the VAT account, that £101, I know that some of the corresponding debit will be in the bank account, some in the cash, but it's not easy to say how much of each, and I don't really want to go through all of the work of splitting it out. So that's why we'll use the description cash book. And so that is how we go about posting information from a cash book that doesn't have balances and on the receipts side.